Welcome back to Investing Talk Podcast. We're so glad you're joining us today. In the world of investing, anticipating what's next is, well, it's half the battle, especially when it comes to earnings reports. Today, we're zeroing in on an upcoming earnings report that's definitely got the market's attention. Cooper Companies. We'll be breaking down what analysts are expecting, how Cooper Companies has performed historically, and what the key indicators are telling us right now. Our goal is really to give you a clear, concise picture so you can be well informed. Before we get started, if you're finding value in these discussions, please consider hitting that subscribe button, maybe liking this episode, and leaving a comment. Your support really helps us bring you more of this content. And hey, if there's a specific company you'd like us to look into for an upcoming earnings discussion, just leave a comment below. It helps us know what matters most to you.
That's right. Today we're focusing on Cooper Company's upcoming earnings and, what it truly means for you, the investor. This isn't just about the numbers. It's really about understanding the narrative behind the figures.
Okay, let's unpack this then. When exactly should we be looking out for Cooper Company's report, and what's the general buzz around those expected numbers?
Right, this is where it all begins. Cooper Companies is set to report after market close on Wednesday, August 27th, 2025. The conference call will follow at 5:00 p.m. Eastern Time. Now, what's fascinating here is the analyst consensus. They're looking for revenue to hit approximately $1.07 billion,
Okay.
which, if they hit it, would be about 6.2% year-over-year growth. Pretty solid.
And earnings per share, what's the target there?
For earnings per share, the consensus stands at $1.06. That reflects a 10.4% year-over-year increase. So decent growth expected on both lines.
10.4%. Interesting. Any whispers or, unofficial numbers floating around that we should be aware of? Sometimes those pop up.
Yeah, they do. But not really for Cooper Companies this time. The consensus of $1.06 for EPS seems pretty firm. There's no widely referenced whisper number suggesting otherwise, which, can sometimes happen.
Okay, so the official number is the one everyone's watching.
Exactly. And if we connect this to the bigger picture, this consensus is roughly aligned with management's previous guidance for fiscal year 2025. They targeted EPS of $4.05 to $4.11 and revenue of $4.1 billion. So this suggests a relatively stable expectation from both analysts and the company itself, kind of in sync.
Gotcha. So they've set expectations, seems pretty stable. But how has Cooper Companies typically performed against those expectations in the past? Have they been consistent in, say, surprising the market?
Yeah, that raises an important question, right? Because historical performance can offer clues. And looking at the last 4 quarters, Cooper Companies has actually shown a pattern of positive earnings surprises.
Oh, really?
Yeah. For example, last quarter, they beat EPS estimates by 3 cents. They reported 96 cents against an estimate of near 93. Typically, they've beaten consensus by about, say, 2 to 4%. So they do tend to nudge above the bar.
Okay, so a history of modest beats.
Yeah.
And how has the stock price reacted to these beats? Does it usually jump significantly, or is it more muted?
Well, that's the interesting part. Historically, the post-earnings price reaction has been pretty moderate, often actually below what the options market was implying might happen.
Huh.
We've seen some modest upswings after a beat, sure, but these haven't typically translated into, sustained rallies. Specifically, in the last 4 releases, there was 1 positive reaction, 1 kind of muted reaction, and 2 neutral to slightly negative moves.
Even with the earnings beats.
Yes, even with earnings beats, which suggests that while they might hit the numbers, the market's enthusiasm for a big, sustained pop hasn't always followed. Maybe the beats are expected, or maybe something else is tempering the reaction.
That's really key. What about the underlying trends then? Revenue, margins. Are those painting a healthy picture? Forget the stock reaction for a second.
Yes, absolutely. The key metric trends show revenue growing pretty consistently in the mid-single digits year over year. Solid. Operating margins have been stable to slightly improved, which is good to see.
Always good.
And crucially, EPS growth has actually outpaced revenue growth. That's often due to operational efficiencies kicking in.
So they're getting more profitable on the sales they make.
Exactly. It indicates a well-managed business squeezing more out of the operations.
Okay. So beyond the numbers, were there any major events or, big news during the quarter that could influence this report? New product launches, acquisitions, anything significant like that?
Interestingly, no huge material product launches or major M&A were reported within the quarter itself. It was relatively quiet on that front. However, there has been sort of steady positive sentiment around their innovation pipeline and consistent growth in the contact lens segment Cooper Vision.
Right, that's a big part of their business.
It is. So while no big corporate events happened, the core business areas seem to be generating this kind of quiet confidence, steady progress.
Makes sense. And what about the broader market? How have sector and macroeconomic trends played into Cooper Company's quarter? Anything external really pushing or pulling them?
Well, the sector itself, medical devices and consumer health, remains pretty resilient. It's supported by fairly stable consumer health spending.
Yeah.
People still need contacts and medical devices.
True.
Supply chains for medical devices have also largely normalized, which is definitely a positive compared to maybe a year or two ago.
Good point.
The main external factor to watch, though it might be minor, could be dollar strength. That might modestly impact their international sales since they operate globally.
Okay, the usual currency headwind potential.
Right. And macro factors like interest rates, inflation, they've generally remained kind of neutral for their specific business model. Not huge drivers either way recently.
And have analysts been changing their tune recently? Any upgrades, downgrades, shifts in thinking?
Nope, no significant shifts there either. Consensus estimates and price targets have remained pretty much unchanged in the prior month.
Stable.
Yeah, which suggests steady expectations. We haven't seen any notable upgrades or downgrades right before this release. It all points to a fairly, well, predictable environment leading into the report.
Okay, so stable company, stable expectations. With all that in mind, what is the stock itself doing in the days leading up to the report? Are we seeing a big run-up suggesting excitement? Or maybe a sell-off indicating nerves?
Actually, the pre-earnings price action for Cooper Companies has been relatively range-bound, kind of stuck in a channel.
Flatlining a bit.
Yeah, pretty much. There hasn't been a pronounced run-up or a significant sell-off. And that's often a sign of, well, tempered expectations.
Right, the market isn't betting big one way or the other.
Exactly. It doesn't seem like the market is anticipating a huge surprise here, positive or negative.
Okay, so the stock price is quiet. What are the options markets telling us? They often price in expected volatility. What kind of move are they predicting?
Good question. Looking at the options, the ratio of calls to puts is pretty balanced. So again, no strong directional bet there.
Okay.
Open interest in the at-the-money straddles that's buying both a call and a put at the current price. It is elevated, but it's not like extreme.
So some people are betting on a move, but not necessarily a massive one.
Precisely. It signals moderate hedging activity rather than really aggressive bets on a big swing, people covering themselves maybe, and the implied volatility derived from those options prices. It's pricing in about a plus or minus 4 to 5% move for earnings.
4 to 5%. Okay, that's not insignificant, but not explosive either.
Exactly. It confirms that moderate expectation for the price reaction. It's not suggesting the stock's going to, double or halve overnight.
Right. Okay. Given all this information, the history, the stability, the muted pre-earnings action, the options pricing, what are the most likely scenarios we could see unfold after the report? What would signal a truly bullish outcome versus a bearish one?
Yeah, this is crucial for understanding the potential impact. For a bullish case, a really positive outcome, you'd be looking for a strong beat and raise.
Beat and raise. The classic.
Right. So that means EPS maybe above $1.10, noticeably above consensus and revenue approaching, or maybe even exceeding $1.08 billion. And critically, we'd also need to see positive guidance for the next quarter or the full year that's clearly above what analysts are currently expecting.
So beating a quarter isn't enough. They have to guide higher, too.
Absolutely. Or maybe signs of unexpectedly higher margins or clear acceleration in growth from those new product lines we talked about, something that changes the narrative.
Okay. And on the flip side, what would trigger a negative reaction? What's the bearish case look like?
The bearish case would obviously involve an EPS miss, perhaps below $1.05, or revenue coming in under that $1.06 billion mark. But maybe even more damaging would be disappointing guidance.
Ah, the guidance again.
Yeah. Any signs of margin compression, maybe weak commentary on demand, or slowdowns mentioned in their core segments like contact lenses, that would definitely lead to a negative reaction. The market hates bad news about the future.
Understood. So if you had to boil it all down, what's the single most important thing for us to keep an eye on when that report actually drops? The one key metric or piece of commentary.
Okay, here's where it gets really interesting, I think. The single most important metric to watch this time around is forward guidance for both EPS and revenue.
Really zeroing in on that.
Absolutely. While the headline numbers for the quarter are important, of course, the market will likely react much more strongly to what management says about the future. given their history of modest beats and muted reactions, that forward look is what's going to drive sentiment after the release. It's the potential game changer.
That makes a lot of sense. So putting it all together then, what's your overall leaning for Cooper companies going into this report? Bullish, bearish, neutral, and what does that suggest for our listeners?
Well, based on everything we've discussed, my overall leaning is decidedly neutral.
Neutral. Okay.
Yeah, the current data suggests neither a really compelling bullish nor a strongly bearish skew. It just feels balanced. This is largely due to those consensus expectations being so aligned with guidance,
Yeah.
the subdued technical setup, and what the options market is implying that moderate move.
Right.
My confidence score for that neutral outlook, maybe a 6 out of 10.
Okay. Fairly confident in neutral.
Yeah. The rationale is basically Cooper's track record of modest beats and stability suggests a low chance of a major negative surprise. But the upside seems capped by a lack of really strong bullish sector momentum or any obvious near-term catalysts.
It feels steady.
Steady is the word. So what does this neutral outlook mean for different types of investors? Someone risk-averse versus someone more aggressive?
Good question. For risk-averse investors, it probably makes sense to just wait. Consider waiting for the post-earnings volatility, even if it's expected to be moderate, to subside before entering or changing a position. Why take the earnings risk if you don't have to?
Makes sense. Play it safe. For more risk-tolerant traders, well, an at-the-money straddle or strangle could be considered if you genuinely believe a move outside that expected 4 or 5% range is likely. But frankly, the market's muted pricing suggests there isn't a huge edge there. It feels like a low probability bet for a big breakout.
So maybe not the best setup for options plays?
Probably not, unless you have a very strong conviction the market is wrong. And for long-term investors, look, owning the shares through the earnings print is perfectly reasonable if you're comfortable with the sector's stability and Cooper's track record. But it's probably not essential for short-term speculation, given the lack of stronger pre-earnings signals pointing one way or the other.
That's a very clear breakdown. So it's a comprehensive look at Cooper Company's upcoming earnings. It sounds like while the company has this stable history, strong operations, the market isn't really anticipating fireworks, making that forward guidance the real thing to watch. So what does this all mean for you listening in? Will you be watching for that forward guidance more closely now? Or maybe waiting for the market's initial reaction to settle down?
It's interesting, right? How Cooper's consistent operational skill plays against this generally neutral market sentiment. It's a great example of how all these different pieces, history, current data, market expectations, paint a really nuanced picture for your investment decisions. And here's a thought. If forward guidance is the ultimate signal for a company like Cooper, and the market generally expects more of the same, well, what does that tell us about investing today? Is past performance becoming less important than just management's next sentence? Makes you think, doesn't it? Thank you for joining us on Investing Talk Podcast. We really hope this discussion have equipped you with some valuable insights.
If you enjoyed this, remember to subscribe, like, and maybe leave us a comment. You can also support us by considering buying us a coffee. The link's usually somewhere around here. And don't forget, if there's a specific company's earnings you'd like us to explore next time, just drop it in the comments below. We're always here to help you get well informed. Until next time.